When the market goes quiet, that's when most people make their worst decisions. Right now, if you look at crypto, it feels like everything that just happened over the past 12 months has vanished. All of that volume, all of that price action, where did it go? Other than the weekly 5% or even 10% random rallies or dumps. The market right now is stagnant. And I get it, this can leave a lot of you really confused right now, not knowing where the price is gonna go or what's gonna happen next. At the moment, Bitcoin has been hovering in this really weird range around 88,000 to the low 90s. And if you've been in crypto long enough, you know exactly what this means. We're stuck in this strange zone, kind of like a coiled spring ready to go up or down. The thing is, nobody really knows which way we're gonna go. But on the other hand, the data tells us something completely different. Twitter is basically a ghost town. All the liquidity that used to rally the market has been completely sucked out, mostly by meme coins and short-term speculation. That's exactly why we haven't seen a typical altcoin season yet. There's just so much liquidity that has been taken out of the market, and there's not enough to support these kinds of moves right now. And that's why right now we're seeing a lot of stagnant price action, and that can be more dangerous than rallies or typical crashes. When there's no clear trend, people don't know how to position themselves. So they end up on the wrong side of a sudden move, either buying in too early or selling too late. This happens all the time, so when it finally comes, be prepared beforehand because it tends to be super fast. One thing to notice is that volatility is extremely low right now. Bitcoin and major cryptos are moving in unusual tight ranges. Prices aren't swinging much day to day, and implied volatility, which is what the market expects future price movement to be, has dropped to multi-year lows. For some context, Bitcoin's 30-day implied volatility recently hit levels we haven't seen since October of 2023. Now, low volatility doesn't mean stability. It actually signals market indecision. Historically, periods like this are almost always followed by large moves. Another sign the market is quiet is low trading volume. Overall, crypto market capitalization has dropped and day-to-day trading has slowed down. See, this is completely normal around the end of the year, but what's really interesting is Bitcoin has recently been trading around the all-time high just a few months ago. When liquidity is thin, everything changes. Even small buy or sell orders can move prices a lot, just because there aren't enough people on the other side willing to take those trades. This is exactly what's happening in crypto right now. A little buying and selling pressure can turn into big swings just because people aren't actively trading in the market. You can even see this on chain with the maker and take fees just by looking at an exchange order block. So even if price charts look calm, derivative markets are telling a completely different story. People that have been in and around crypto for a long time have noticed rising open interest, meaning there's a lot of dormant positions that haven't been resolved yet, and backwardation in Bitcoin futures, which is when futures trade below spot. This is really rare, but it often points to risk-off sentiment. So even when the prices are quiet right now, a lot of traders are hedging aggressively. And when traders hedge aggressively, this can send volatility spikes across the whole market. It's easy to look at all the quiet prices of Bitcoin, Ethereum, not really moving and say the market is dead, but that's not what's actually happening behind the scenes. Institutional money and spot Bitcoin ETFs have become a large share of trading volume. Institutional traders act differently than retail traders. They buy and hold, hedge with derivatives, and aren't really looking for short-term swings. In fact, Bitcoin in 2025 has been less volatile than some major stocks like Nvidia. This is a huge shift, and it shows institutional flows are stabilizing daily price movements. So that's a positive for the long-term maturity of crypto, but it also means the market is being less reactive to price movements. All right, so we initialized quiet markets can be risky, but there are two main ways this actually happens. First, leverage accumulates. People place positions with tight losses because prices haven't moved so much. When a sudden rally hits out of nowhere, traders with positions can get liquidated very quickly. This creates a ripple effect throughout the whole market, and it can lead to liquidations as prices move up higher. Other traders start to jump in out of FOMO, and the cycle repeats, driving the price even higher and accelerating the move up. It's the same for when the price drops dramatically. People panic sell, and trigger liquidations from long. And this is why we see so much volume in such a short amount of time. Usually you can see the price go up or down and then bounce the other way very quickly. The second point I have is liquidity can vanish instantly. Crypto isn't like the stock market. When large whales, someone with a lot of money, leaves crypto temporarily, bids and asks disappear as fast as they can see on the order blocks. In 2025 has shown that during stressful moments in crypto price action, liquidity dries up almost instantly, leading to gaps in the spread where price quickly jumps up and down. So the lesson here is simple. Quiet markets are deceptive. They might feel safe, but that's when mistakes happen. When liquidity is low, people start to take on positions with high leverage, and that's the perfect recipe for a storm waiting to happen. So if you're trading or investing right now, the key is to stay alert and understand that sideways price action doesn't always mean nothing is happening. In fact, you should get ready to position yourself properly so you don't get caught up on the wrong side. That's all I'm going to leave you with in this video. With that being said, when everything's quiet, that's when the most mistakes happen.